Greetings, members, one and all of the Salivation Nation.
The Death Cross.
Is it bad news for gold? Let's explore. Well, according here to MarketWatch, and a little bit of a technical analysis lingo, throwing in here, the death cross chart pattern signals a bearish trend for gold as we move with another downward movement in gold and other precious metals, save for silver, which is, I think, benefiting a bit from what I talked about in previous days, sort of the second phase of the silver squeeze of sorts. Gold futures saw a fourth loss in a row on Wednesday, with prices logging their lowest finish since June, as a death cross chart pattern formed, signaling a potential longer-term downtrend in the metals prices. The most active gold contract futures on Wednesday marked its first death cross since June 2018, according to Dow Jones market data, which the Dow Jones has finished with another record high today, with the 50-day moving average at $1,856, and the 200-day moving average at $1,857.67. So a death cross occurs when the 50-day moving average crosses below the 200-day moving average, which is widely viewed as a dividing line between longer-term uptrends and downtrends. The death cross isn't an ideal development for gold, especially since that hasn't happened in more than 2 years, said Craig Earlham, senior market analyst at Oanda, in a market update. Higher U.S. Treasury yields are making investors a little nervous and are generally positive for the dollar, he said. A move back above 91 in the ICE U.S. dollar index could be bullish signal for the dollar. This is naturally a negative development for gold, as we all know. Yields in U.S. Treasuries seen as a direct haven competitor to gold that also offers a coupon have been touching their highest levels in months, making a more compelling case to own bonds compared against commodities that don't offer a yield. So this is sort of one of those things that can occur that leaves us kind of stumped as to why isn't gold and silver going up, especially considering what's going on with the Federal Reserve. But we know that this administration is going to be doing with much more quantitative easing, much more government spending, and the like. So those are the things that are keeping us on our toes and guessing what's going to happen with these prices. But it does provide an opportunity for sure in terms of buying, but how low will it go? I don't know. The 10-year Treasury note, which is up 1.28%, touched a high of 1.33% Wednesday, putting the government bond near its highest level since February of 2020. Rising interest rates have created downward pressure on gold as they make the dollar and bonds relatively more attractive as stores of value than gold, said Jason Teed, co-portfolio manager of the Gold Bullion Strategy Fund. Still, a record high price for the metal is not outside the realm of possibility if interest rates stay suppressed and inflation concerns increase as the economy recovers. And I believe we're going to see this happen. You know, the movement of the metals today is part and parcel to what we're seeing as far as the spending in terms of the economy, with a lot of these $600 checks that had already went out, which I still have yet to get. People have been spending those, and that's been the velocity of money has increased a bit. And so far, that kind of economic activity has proved well for the stock market and bad for the for precious metal prices, and maybe even boosted the dollar index up a little bit. But we'll see how this all plays out. We know it's not going to end well when we understand that there's going to be more of that spending that happens and the velocity of money continues. Well, inflation concerns will certainly ramp up as the economy recovers. April gold fell $26.20 to settle at $1772.80 an ounce after skidding 1.3% on Tuesday. We'll look at the current prices here momentarily of the metals. The yellow metal booked the lowest finish for the most active contract since late June. Overall, markets are optimistic about an economic recovery as the rollout of the COVID-19 vaccine continues. David Russell, Director of Communications at Goldcore, told MarketWatch. Updates on the next round of stimulus may well continue the asset class inflation that we are currently seeing, and some of this is sure to flow into gold. The market, however, will wait to see how the death cross plays out, he said. Technically, gold is looking soft, though there should be a good support around 1755 to 1765 level, and below that support is at $1,700. I don't see it going below the 1755 level. I'd be very surprised, but we could be in for this little bit of a bear market for a while. For some of us, that provides a good buying opportunity. Meanwhile, the minutes of the Federal Open Market Committee January meeting were released Wednesday after the gold futures settlement showed that committee members have seen an increase in downward risk to employment and inflation. Losses for gold to follow. U.S. economic data Wednesday with retail sales up 5.3%, which is what I talked about earlier. The largest increase in 8 months. Positive sign in regard to the health of the consumer amid the COVID-19 pandemic. But what are people spending this money on? Well, I heard in a news report, a lot of it was electronics, things that weren't necessarily necessities. And my guess is if this $1,400 gets put out there, we'll see more of the same, although amplified, more than double. If they do get this $1,400 checks, we'll see. So there you have it. So fascinating report indeed, and that's this death cross. We'll see how that plays out, but it could mean a couple days or weeks of downward gold momentum. So how does this translate? What does this look like on the charts? Well, right now the markets are open still for a little bit as of the recording of this video, and we see gold has hit patriotic territory again in the ask price, 1776. Yes, indeed. Pretty wild to see that number, and it's pretty low. It's lost $17.70, down almost a full percentage point. But look at silver, the only metal that's up, and platinum and palladium are also down by somewhat measurable numbers as well. So I believe the silver's momentum upwards is as a result of the great demand in the physical markets, and maybe even in the industrial sector as well too. Maybe some of them are panicking and trying to get more of this silver before it goes up too much. And who knows? And that's kind of keeping the price up. Now, this is an unusual time because we're seeing what I reported on yesterday about BlackRock getting out of gold, selling over, that much, over $400 million worth of gold in the GLD and putting some of that back into silver. But just that amount of sell-off could have potentially spooked some of those holding the GLD, and maybe some of them sold off as well. But nonetheless, usually what happens when gold drops, silver drops a lot more. So in other words, under a normal circumstance, we would see 1% drop in gold. We may see 2-3% drop in silver. It's a very volatile metal, but this time it's the only one that's in the plus category here with a 9-cent increase, which isn't that much to speak of. It's only just over a third of a percentage point upwards. But what does that do? It has lowered the gold to silver ratio to 65. In fact, earlier it was into the high 64s, 65-1. And this is a territory that is normal, or was the old normal. We're getting back into the old normal. What is the new normal? I don't know, but it's there. But so it apparently looks like this squeeze, however it's defined, who started it, it's being continued in some manner or form by this Wall Street Silver group on Reddit that I talked about, and those of us who are buying the physical, whether or we are or not in the Wall Street Silver group, people are buying physical, and that is encouraging. And I think that's helping, at least to some extent, especially that PSLV putting that pressure, I guess, on the COMEX. But there's a lot of silver out there, and things can change very quickly. I think this buying has got to be expanded more, and the momentum has got to be constant for quite a while before it to really have a sustained impact. Because the movement in the price, but I think what we're seeing today is a result of that. At least that's my feeling, but we'll see how it plays out. Especially if silver can sustain when all the other metals around that are falling. This should be encouraging to the Wall Street silver folks. But again, this is just one snapshot in time. It's a sustained effort that's got to continue for it to really have any impact. But again, as I warned in my video talking about this, I will continue that today. And that is to be careful and understand what you're buying and hold it for the long haul. Because really that's how the message is going to be sent. It's a matter of holding on to it through thick and thin. There you have it. So there's the news for this evening. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video. And yes, there is a notification bell. If you hit it, you will be apprised of the latest video that will arise here on this channel. And I want to extend that multitude of gratitude to you all and encourage you to please rate, share, comment, and subscribe.